Hi. So this is what stocks to buy in 2026 by the Impact Factor. This is the first video we're going to make, and this is the first introduction to this series where I'm going to tell you what I think about the stock market, what I think about the average stock market participant, and what I think about you investing in the stock market. Don't. You're going to fucking lose money. It's going to be horrible for you. You're going to have a horrible experience in the stock market, and you're going to lose all of your money. Don't invest in the stock market. You will lose all of your money. You're probably a new participant. You've been here for maybe a year. So what you are seeing is this. You saw the S&P returning 20%, 1878 in the past year to date. It was, oh, it's the wrong year to date, but in 2025, it was around 17%, right? Something like that. So you looked at this and you thought, wow, that's making a killing. I should definitely join the market. I should definitely be a part of that. I should be making that free money. There's free money in the stock market, except there isn't. And there's never been. And there's never any free money anywhere. The closest you come to free money is when somebody offers you a free money for a particular service at the Wendy's. Maybe you even saw this. This is a 5-year chart, and you've been looking at this, and you were like, wow, if I picked the perfect bottom, I would have made 93% of money, 93% return in just 3 years. That's fantastic. Because we're a part of this big bull run, and because the charts look like this, people get this wrong idea that stocks only go up, and that this is easy, and that they should do it. So the average return which is, by the way, measured usually from 1929 or 1930. Guess why then, by the way. And it looks something like this, and the S&P has historically returned about 7% per year, per annum, but this is before taxes, this is before inflation, and this is before fees, and this is before accounting for the fact that most individual investors lose money. So if you actually check the data, 90% of investors lose money. And this is an AI overview, but it's completely true. And it's true because most people don't have a stomach for it, because it's complicated. Why do you think there is literally a street in New York full of people trying to figure out how to make 0.5 percentage point more a year, people with PhDs, and there's buildings of them, and they pay them millions just to figure out how to make a small percentage of profit? And you're thinking that you're going to be consistent because you're somehow smarter than everybody, because you Googled it, or you did something like this, where I just put what stocks to buy in 2026 on YouTube, and you get these people like this one, which is my favorite.
3 best performing stocks in my $7 million portfolio that I'm buying more of in 2026. I'm Kiana, the Invest Diva, author of these books. I went from
the Invest Diva, the author of these books. So, cool.
These books.
Nobody ever heard of you, and I saw her before. She's saying that she made $500 into 7 million. That's never gonna happen. And you're listening to these people. They're called like Mr. Fired Up Wealth, Zip Trader, Tom Nash, and I'm not shitting on those people. Okay, some of those people are bound to have okay returns. Maybe some of them put most of their money into Nvidia actually and got some return, but that's not gonna happen. That's not gonna work for you. That's not gonna work for you because you're an idiot, and I'm an idiot too. But I've read some books, I've watched some videos, I've been in the market for a couple of years, and I know more than you do. This is what this channel is for. If you actually have a couple $1,000, maybe a couple $100, and you want to start thinking about investing, buy those books. These are the classics. And I'm not going to lie, The Intelligent Investor is pretty boring. So maybe you should just hack it and get a PDF and read chapter 8 and 20. The most important concepts you can get is the margin of safety. Common stocks and uncommon profits is great because Philip Fisher was smart, because he was an investor that actually thought about companies as thought about shares as parts of companies in a living business. And it's not just a ticker symbol that you're buying. It's not just a top new 10 AI stocks that are going to make you millions this year. Now, free money, pick it up. If you hear somebody calling you and telling you there's free money laying there on the street, are you actually gonna do it? Are you actually gonna wire him $500 and buy something from him and then wait for the millions to come? No. And it's the same problem with S&P 500. This is complicated. Okay, and there has been years where people bought, particularly at the tops, and then they had no returns for years. They were losing money for years, and that's not good for your mental health. That's not good for your mindset as an investor. That's not good because it's going to deter you and defer you from investing more and from buying actual real businesses. So what you need to do is you need to start analyzing businesses. Check it out. If you bought at the peak in 2000s, say you were same situation as now, you're thinking, wow, it's been a great year, because before the 2000, the market had a huge run up. So here you go, from 456 in 94 to 1400 in 2000. What would stop you from buying there? And say you did, and you bought somewhere in June 2000, you got the S&P 500 and ETF following it. You would have needed to wait 7 years to break even. And that's a nominal value. That's not real value. This is not counting for inflation, for taxes, for time, money value. This is not counting for the fact that you could have went on a vacation and met a cool guy and started a company with him for the same money that instead you chose to buy fucking numbers on the screen with. And same shit happened historically, but in this is not even the worst part, right? So even if you, for example, this is a great run up, and there's many reasons why we had this bull run. But if you bought the same thing in 29, right before the crash, and there is no reason why this crash shouldn't happen right now. Okay, nobody knows. Say you bought June 1929, you bought some just put some money into an ETF or something here at 31.71. You would need to wait 54 minus 29, 25 years to break even nominally. Of course, there's going to be some dividends, some stuff like that, so maybe it's going to be 20 years. But are you actually ready to wait 20 years to get your money back? And tell you what, you might be the one guy that's going to actually dig in and keep that money, and in 20 years you're going to be even, and maybe in 50 years you're going to actually get your 10% return on $1,000, but you're most probably just going to sell at a loss. And this is why most people lose money, and I have lost money, and I have lost a lot of money, and I have learned. This is why I made this channel. I made this channel to help people like you who are trying to get in, but tell you what, watching these videos, if you're one of the people that are watching these videos, you should definitely not be investing as of now, right? Tell you what, follow and subscribe to the channel. I will be making more of these videos. I'll be showing you how to do an analysis. I'll be telling you how to think about the business. Might give you a few stock picks. There's going to be a Patreon. I'm going to put some analysis there, but you should not be investing. These are the 3 questions that you should ask yourself right now if you're trying to put some money into the stock market. If you can't name 10 investors, and I don't mean your uncle, I don't mean your fucking mother or Warren Buffett. Okay, I mean, Warren Buffett is all right. Everybody knows him, but he's all right. But if you can't honestly name 10 investors, like people who are strictly doing finance, I'm thinking Michael Steinhardt, I'm thinking Stanley Druckenmiller, I'm thinking Chris Hahn. You can't name those people, they don't come up to your head. That's a red line. Don't cross it. Don't lose money. Buy some books, watch interviews with smart people. Don't watch these idiots. Why would you watch this? Why would you listen to those people? Why would you listen to this guy? Do this. And watch all of them. Watch all the interviews Buffett has ever given. Then find what investors Buffett respects and listen to all of this. Here, you get a playlist, 85 videos. I'm not saying I've seen them all, but I've seen a huge chunk of them. And a lot of them, he just talks about, I don't know, being an old creep and worshipping the cabal or whatever. But just listen to the ones that it makes sense to. Play World of Tanks in the background, listen to those videos, and think about investing. Don't invest. Don't put your money into it. If you really have to do something, buy a share or a fractional share in a business and watch the way it's going. It's a good way to keep up with the news, to keep up with the stock market, because if you see that you're actually losing or making money, you will be more inclined to look at the news that is happening to the company. Maybe they had a bad quarter. Maybe the drug trial failed. Maybe the CEO got shot in New York City. Just don't put all of your money into it, and don't put a lot of money into it. What I would recommend is watch all the interviews of famous investors ever. Read all the books of famous investors ever. Read all the public letters that Buffett has ever written. They're all available for free. Just Google them. And of course, subscribe to the Impact Factor. And I'll see you in the next one.